In this video, we're going to be looking at the top headlines in crypto from the past week or so, including but not limited to a government banning Worldcoin over privacy fears, the Curve Finance exploiter leaving a rather interesting message for the Curve team. Also, could SBF and also perhaps Alameda be linked to the recent BALD rug, and a lot more. Also, I would like to mention that this video is intended for entertainment and also educational purposes only. I am not a registered financial advisor. Investing in cryptocurrency always carries risk. However, with that being said, if you learn anything at all this video, it would be really appreciated if you smash that like button and also subscribe. With that aside, the Curve Finance exploit updates. So in the wake of the recent exploit involving Curve Finance, the individual responsible has unexpectedly returned a large part of the misappropriated assets to the platform. Reports show that the person responsible or person or parties for the exploit has transferred approximately $12.7 million composed of 4,820 Alchemix Ethereum or ALETH and 2,258 Ethereum back to the Alchemix Finance platform. However, these developments come after Curve's plea on August the 3rd for the perpetrator to return the stolen assets, to which the person asked for address confirmation. The fund return process was completed in 3 separate transactions. The first transaction was a trial involving a transfer of 1 ALETH. Subsequently, a batch of 1,000 ALETH valued at around $1.7 million was returned around 9 a.m. ET. A few minutes later, another 3,819 ALETH valued at approximately $6.7 million was then returned after that. Following the return of the ALETH, the perpetrator then sent back 2,258 Ethereum or ETH worth around $4.2 million to an Alchemix Finance wallet. This brought the total value of the returned assets to roughly $12.7 million. And this is where things get quite interesting again. So in one of the transactions, the person who exploited Curve Finance included a message providing some insight into why they decided to return the funds. And here is the message. I saw some ridiculous views, so I want to clarify that I'm refunding you, not because you can find me, it's because I don't want to ruin your project. Maybe it's a lot of money for a lot of people, but not for me. I'm smarter than all of you. Interesting. I did miss out as well a tiny bit of the message at the very end, which can be seen on the screen now. Worldcoin has been making crypto headlines the past few weeks, but not always perhaps for the right reasons. Kenya has recently decided to halt the trading of Worldcoin token and also stop the rollout of their orbs or the iris scanners that they use. And the cryptocurrency, obviously known as Worldcoin, created by OpenAI's chief Sam Altman, mandates users to undergo an eye scan to secure a free portion of the WLD crypto token. According to local news there, over 350,000 Kenyans have already registered for this, accounting for a substantial portion of its nearly 2 million users globally. Investigations into Worldcoin's intended use of people's data are being conducted, according to the Interior Minister, Mr. Kindiki. Kindiki stated that all relevant bodies pertaining to security, financial services, and also data protection have initiated probes and investigations to verify the genuineness and legality of these reported activities. However, despite the ongoing scrutiny, Worldcoin pledged to remain dedicated to creating a diverse, privacy-focused, and decentralized entryway into the global digital economy. The company is eager to resume its operations in Kenya, collaborating closely with local regulators there and also other stakeholders as per their statement. Worldcoin's iris scanning orbs are currently in use across 20 countries, spanning 35 cities, including London, Paris, and also New York. Before the suspension was announced in Kenya, large gatherings at the Worldcoin registration centres in Nairobi were deemed as a security risk. Participants received a share worth approximately $50 worth of Worldcoin, speculating that the project could ultimately contribute to a universal basic income. The value of WLD token surged more than 50% shortly after its recent launch, in stark contrast with the broader market trends, which have obviously seen a dip in prices for Bitcoin and other leading cryptocurrencies. While cryptocurrency enthusiasts and experts regard the project as both over-the-top and perhaps revolutionary as well, due to its unique method of differentiating humans from AI bots, digital rights attorneys caution that it presents substantial burden for regulatory authorities. Let us know in the comments, would you sign up for $50 worth of free Worldcoin for an iris scan? I'm not sure I would. Next up, CoinBASE. So CoinBASE, obviously the largest US cryptocurrency exchange that's publicly traded, has set a public launch date for August the 9th for its base Layer 2 blockchain developed with Optimism's OP stack, similar to OP-BNB. Base has been live for developers since July for testing applications on the new network. Beginning Thursday, users can start to transfer their Ethereum or ETH to Base, according to a CoinBASE blog post. The timing of the announcement coincides with Coinbase's scheduled reporting of second quarter earnings and the commencement of On-Chain Summer, an event series that allows creators and also developers to generate art or construct applications on the Base chain. Prominent participants include Coca-Cola, gaming giant Atari, and non-fungible token platform OpenSea. Coinbase Wallet's X, or formerly Twitter account, pointed out that it's already been feasible to deposit Ether on Base even prior to the network's public opening. According to data on June, over $68 million worth of Ethereum was transferred to the network just last weekend as well. In similar moves as well, venture capital firm Andreessen Horowitz, also known as A16Z, has leveraged the OP stack and is set to launch its own Layer 2 rollup named Magi. And moving on to Binance and the SEC once again. Officials from the US Department of Justice are contemplating levying fraud charges against the cryptocurrency exchange Binance in an interesting turn. However, they are apprehensive about the potential financial impact on consumers, sources close to the issue have revealed. Federal prosecutors are concerned that charging Binance might trigger a rush of withdrawals from the exchange akin to the one that led to the bankruptcy of the platform FTX, although it is a very, very different scenario. This could result in consumers losing their money and potentially triggering a crisis in the crypto markets, these sources explained. However, as we are well aware, Binance does back their assets one-to-one, as you can see on their on-chain data on our website, bsc.news. Alternate options such as imposing fines or negotiating deferred or non-prosecution agreements are being evaluated by the prosecutors. Such an outcome would represent a compromise attributing responsibility to Binance for alleged unlawful activities while minimizing consumer damage. This dilemma underscores the complexity and also swiftly changing landscape of crypto regulation and enforcement, particularly in the US, where companies operate in a legally ambiguous space and consumers lack the protections provided by the traditional banking system. The Department of Justice refrained from commenting on the matter. Binance too did not respond to a request for comment. Now on to something quite interesting about SBF and also perhaps Alameda Research as well. On-chain data indicates that the deployer contract for the brief and also highly publicized meme coin BALD has connections with wallets linked to Alameda and is an active participant in DeFi during its initial stages. Could SBF, the founder and controller of Alameda Research, be involved in the abrupt downfall of BALD? The on-chain data suggests that BALD deployer contract had transactions with a wallet identified by Nansen as being owned by Alameda Research. This information was initially mentioned by a number of blockchain detectives on social media platform formerly known as Twitter and later verified on another news platform. Igor Agambadiev, who is Wintermute's research head, connected another wallet address also to Alameda. He mentioned that the wallet's owner demonstrated strong technical abilities and was an adept DeFi user, engaging in trading on first versions of DYDX and Oasis, and voting on SushiSwap's initial proposals. The mentioned wallet appears to have been active on cryptocurrency exchanges such as Binance, FTX, and CoinBASE during that period. It was a heavy DeFi user, harvesting millions of dollars from early DeFi projects like Yearn Finance and also Cream. However, Agambadiev suggested that while it appears to be definitely someone from Alameda, it was unlikely to be SBF himself. Thank you once again for watching all the way through. Those are some of the top news stories for this week. Have a wonderful weekend. Go and see some family, touch some grass, as they say, and speak very, very soon. Also, do not forget to like, subscribe, and also leave us a comment. Speak soon. Bye-bye.